Has the Fed reached the end of its control mechanism? Is this the end of boom and bust cycles as we know it? Is this a new economic realm that we are entering here in 2020? Hey everybody, JJ here. You're watching Bull Boom Bear Bust. Well, who is saying that the Fed maybe has lost control and that this could be the end of the economic boom and bust cycles? Well, it's billionaire investment chief of Bridgewater Associates, Bob Prince. So let's get into what he's saying and why. Now, first of all, Bridgewater Associates is the world's largest hedge fund with 160 billion in assets under management currently. All right, so this is not a lightweight financial world individual. And what he's saying here is not really anything new, but it does go along with what we talk about on this channel, that historically over the past few decades, the Fed has had to lower interest rates to encourage spending and boost inflation. And this describes exactly the boom and bust cycles that we're so familiar with. The ensuing growth then breeds excess that overheats the economy. That's the boom. These conditions prompt the Fed to raise borrowing costs, so then they have to raise interest rates to cool down the rising prices, to cool down the inflation. That ends up choking credit availability and taking economic conditions south again, and that's the bust, right? So we see the banks, they create the boom, they pull back on the lending, and that helps create the bust. And it's not just the banks. Of course, you have to have the population that goes along with it, that borrows the money that they don't have and go out and bid up asset prices to unbelievable levels in some cases. But the boom and bust cycle is instigated by the manipulation of the interest rates, making it easier to borrow, making it harder to borrow. And when interest rates are higher, it puts banks in basically double jeopardy, because their borrowing costs, when the banks do the interbank lending through the repo market, their costs are higher, and that tends to also tighten up credit because banks have to be much more cautious with the higher interest rates. Now, the next part to me is very interesting because, as I've said many times, we have a lot of people that believe that there's going to be this never-ending boom, that the Fed is never going to stop the stimulus, and there's never going to be another buying opportunity. In fact, people say there's never going to be another bust. It's all going to be hyperinflation from here. Okay, but Mr. Prince says the boom-bust cycle as we know it is over. In a recent interview, he said, quote, "We are unlikely to have another boom, or to have a boom." And he holds this view because the ongoing expansion was facilitated by essentially zero interest rate policies, also known as ZIRP, and unprecedented levels of quantitative easing, and yet it emerged as the slowest growth on record. So think about that. What he says is true. All of the stimulus that's been pumped into the economy, starting from the bailouts back in 2008 to the big surge in the Fed balance sheet, coming to the rescue of the banking system, and now the liquidity injections that are in the billions nearly every day now. And yet all we are getting is average economic growth. If you look at GDP, which I think is a very flawed indicator, but still it's been used for a long time now, many decades, so we'll still look at it. And when you compare the GDP growth to previous administrations, we see that we're pretty much average right now. And to me, that paints a very dark picture, considering all of the stimulus and Fed backing of these markets right now. And in the interview that's being referenced in this article here, Mr. Prince says he does not see future Fed stimulus creating what would be a booming economy. Right? He also points out the low to zero wage growth. Unemployment fell from a peak of about 10% after the last recession down to now around 50-year lows at 3.5%. But wage growth still did not tick up to keep up with the rising cost, to keep up with inflation. And of course, anyone on this channel probably knows this by now, because most of the money is being held up at the very top with stock buybacks, with insiders cashing out with record profits over the past 10 years. Now, it's been very good for the stock market, and some people are reaping the benefits of that through their 401k accounts and their retirements. But when we look at the wealth gap, which we've talked about here many times on this channel, we know that most of this wealth is being concentrated at the top. And in fact, over the past year or two, it's developed again where we're seeing the biggest wealth gap or the biggest wealth divide since prior to the Great Depression. So we have to go back almost 100 years to see this type of wealth disparity, not just in the US, but globally. Now, to me, this is where it gets really scary. He also says no busts will happen either. And I'll explain that. Anyone that knows me knows that I am waiting for the next bust to make my next splurge into real estate investing. Hopefully, at least one other property, maybe two, depending on how low prices go. But if Mr. Prince is correct, there is not going to be a bust, and I find this very, very discouraging. But let's look at some of his reasoning here. And I'll quote from this article. This is Business Insider. I'm going to link to this, by the way. His reason is that the Fed and other central banks are more willing to let inflation oscillate around their target instead of rushing to extinguish it like they did in the past. It was this rush to tighten policy that often sped up the economy's downturn. And let's just pause here for a minute. We've showed that chart many times where interest rates were dropped and then they were raised very rapidly. Then the bust came and then they lowered rates again. Well, of course, now as we approach zero interest rates, we're already in the mid 1% right now, the Fed doesn't have a lot of room. And with the debt that we're seeing right now, even a small uptick in interest rates could cause the worst economic collapse that we've ever witnessed. And I think the Fed now, because they're kind of under the microscope, they are not going to be raising rates. And I've said that on this channel, and I think that's what Mr. Prince is also trying to tell us here. He continues here in this interview, quote, "The Fed is in a box, as are other reserve currency central banks. They cannot risk over tightening their policy, but they also cannot ease substantially because interest rates are still near zero." And it continues here, "This predicament means that in a major departure from history, Fed policy is unlikely to trigger another bust." All right, so let's step away from that for a minute. This is why I say diversify. So if the Fed is not going to tighten ever again, which he's basically alluding to here, then we are going to be in a inflationary, possibly hyperinflationary economy. And that means that those that are holding assets, those that went out and bought real estate and held, those that have something of value, maybe even precious metals, those that are holding assets are going to be the biggest beneficiaries, and those that are sitting in 100% cash or sitting with no hard assets are going to be the biggest ones that are going to lose out because prices are going to continue to rise, and what once was a lot of money, maybe $100,000 that you had saved up, might only buy you a cabin in the woods, and that's pretty scary. To lose your purchasing power after saving up sometimes, in many cases, for decades, and in a hyperinflationary environment, look at Venezuela or some other countries like Zimbabwe. And a few other countries are seeing this inflation take hold, and many people are really, again, losing their life savings or losing the purchasing power, and their savings is not really buying a lot. And he sums it up here saying that this is going to be 20 years of ugliness. Guys, what do we think about this? This is pretty scary to me to think that there's not going to be another bust, that it's all going to be hyperinflation. And because we have the world's reserve currency, I think it's very unlikely to be as bad as Zimbabwe or some of these other smaller countries with currencies that are much less in use. But even if you own property or land and you do see the price go up with a hyperinflationary scenario, think about the higher taxes that you're going to have to pay, and then think about if you lose a job or if the government finally becomes insolvent where Social Security ends up ceasing, right, the government benefits of Social Security. So even if you have assets or property that are appreciating, you're also going to be in a much more difficult situation unless you sell. But then if you do sell, then you're going to have to go out and buy someplace else or rent someplace else to live. And that's going to also be at inflated prices because you're going to see rents rise also with the overall inflation in the economy. Pretty scary stuff. I'd like to hear from you down in the comments. No more boom and bust cycles. What do you think about this? Of course, the name of this channel, you should know that it's very concerning to me to even think about this type of a scenario. And now we've got the biggest hedge fund out there saying that this is what's going to happen with 20 years of ugliness. I hope he's wrong. That's all I got to say. Thanks for watching this episode. Please give us a thumbs up if you like what we talk about, if you got anything out of this video. And we hope to see you again here soon on this channel. Bye for now.